Okay, let's get started. Good afternoon, everyone. My name is Anjana Price, Branch Manager at Vancity Credit Union, and welcome to First Time Homebuyers webinar with Vancity. Next slide. We'd like to begin by acknowledging that Vancity operates on the unceded lands of the Coast Salish people, represented today by Musqueam, Squamish, and Tsleil-Waututh nations. They have been custodians of this land since time immemorial, and as visitors, we would like to start this webinar by paying our deepest respects to the elders of the past, the present, and leaders up and coming. Next slide. So welcome to our webinar, where we'll provide valuable insights into the current mortgage markets, products, and services. Our goal is to equip you with the knowledge you need to plan for the future home buying needs and to connect you with the right professionals in the industry. This webinar will be recorded and will be posted on our YouTube channel following the event. The Q&A button allows you to submit questions, which is available during the presentation, and we look forward to answering any of your questions at the end of the presentation. And lastly, we encourage you to engage with us throughout the webinar and take note of what you find is most important and valuable to you. Next slide. Today, our speakers will be Alissa Frazao, Assistant Branch Manager with Vancity Credit Union, Marcia Jean-Baptiste with CMHC, and Andrew Wan, Realtor with Oakwyn Realty. So let's get started. Alissa, over to you.
Thank you, Anjana, and to all of you, thank you for joining us today. Before we get started, I just wanted to introduce myself. I have worked at Vancity for over 24 years, and most of those years I've spent as a lender or a mortgage development manager. I've helped many people achieve their financial goals of owning a home, owning a revenue property, building a home, and everything in between. I have seen many changes over the years and thought it would be a great time to ensure our members are informed to the best of our ability. So homeownership, one of the biggest purchases of most of our lives. It's just really important that we work with the professionals and the experts in this field. We want to make homeownership a reality, and it's our job and our goal is to empower you and ensure that you have the information that you need to make informed decisions. Throughout this presentation, I will keep the information high level because we want to ensure that we share as much information as we can today in the allotted time. If you already have an account manager that you work with or Vancity mortgage professional, it will be important to book some time to discuss these topics further with them. However, if you do not already have someone you're working with, we will be happy to set you up with the right expert at Vancity. There will be a link available and a QR code throughout this presentation to assist you with booking those appointments. Next slide, please. So whether you're purchasing a home for the first time, currently own a home, or thinking of owning a home in the future, there are many changes that have taken place that are important to take note of. Even since our last webinar in July, there have been some changes that have taken effect, so you can see how quickly this landscape can change. As Anjana mentioned, we do have a representative, Marcia, joining us from CMHC, and she will be going into further detail about some of these updates. But I thought it important to mention as well. So the new rules that are coming into effect are effective December 15th, the government has increased the cap on insured mortgages from 1 million to 1.5 million. For all first-time homebuyers purchasing new builds, so that's new construction, may include condos, you now may be eligible for an amortization up to 30 years. Previously, that was maxed at 25 years, and that can make a huge difference in reducing your monthly payments and really help some people get into the market. As of the 21st of November, high ratio mortgages, they will be allowing you to switch financial institutions without having to requalify at a higher interest rate. It's what we call the stress test. Next slide, please. So what does this mean and why is it important? With the changes the government has announced, it is clear they aim to help some Canadians with affordability and access to home ownership. It can seem like homeownership is a fleeting dream at times, but we are here to make it more of a reality and help you plan to achieve that dream. The one constant I've heard over the years is that people aren't even sure if they'll ever be able to own a home. Can they afford it? Do we have enough to make it work? And how do we even do this? It can seem daunting, but we're here to help you break down the process and tailor it to your financial picture. Next slide, please. So this leads me to your first step, your mortgage journey. It's the mortgage pre-approval. What we do is look at the options available to you and any programs that may help you become a homeowner. We are also here to help navigate through some misconceptions some people may have or have heard over some time. We want to ensure that the information you are working with is accurate and current. We will help you understand where you currently stand in your process or what you need to do to be successful in achieving your goals. We encourage our members to connect with us to really dive in on the details of your financial picture. We will review your income, your employment, your credit report, your debt servicing ratios. That just means your income versus how much you pay towards debt, housing costs. We will take a look at your down payment, and we'll have a review of closing costs. Some closing costs sometimes overlooked is property transfer tax, legal fees. We will look at your down payment and the source of the down payment. We will also determine if there's further documentation that we'll need to collect at that time. We will review any debts you may have and if we need to address debt reduction. So you can see how much is done during this step. So it's really important to take it. The step of the mortgage pre-approval is really for you and for your planning. Next slide, please. Buying a new home. So another benefit of the mortgage pre-approval is that discussing your financial picture with your Vancity mortgage professional really helps alleviate some of the stress or surprises that you may encounter. When purchasing a home, you may find that it's a bit of a stressful period. There might be a lot to accomplish in a short period of time, and this review and mortgage pre-approval step can really help alleviate some of those stresses and really just make your experience of purchasing a home a positive one. Next slide, please. So now that you have your mortgage pre-approval underway, what should be your next step? FHSA, First Home Savings Account. So what is that? Well, it's exactly what it sounds like. It's a new government-approved plan through which members can save up to $40,000 towards purchasing their first home. Contributions within limits are tax deductible, and income earned and withdrawn is tax sheltered. You start earning the contribution room from the time of opening, so it's important that you look into this sooner than later. Again, just to recap the benefits. Contributions can be used as deductions against earned income, which could lower your income tax payable. Tax-sheltered investment growth. So the growth you will receive within your FHSA is tax-sheltered. The tax-free withdrawals. So withdrawals for a qualifying first home purchase are tax-free and do not require future repayment. This is a key benefit. Not requiring the future repayment, that is a huge, huge benefit. Flexible investments. There are a variety of investments you can choose from within your FHSA, and any unused funds can potentially be transferred to your RRSP or RIF in future. So your FHSA can be open with your Vancity professional at the time of your mortgage pre-approval to ensure you're benefiting from the plan as soon as possible. And please note, this does not take away from your plans with your tax-free savings account, your RRSP. This is just to understand how they can work in conjunction with each other and help you get closer to your goal of home ownership. So again, this is where the experts can really help you through all these details and the questions that you may have. Next slide, please. I keep mentioning this. It's very important to book an appointment with your mortgage professional because we want you to ask the questions. We want you to understand and make informed decisions. So today we are presenting current changes. However, there may be more to come towards the end of the year and into 2025. Along with the changes, it's important to understand the mortgage products, the options that come along with each of them, the flexibility you may get with different mortgage options. It's important to really understand all that very well. Even something simple as making a mortgage payment biweekly versus monthly, members are always surprised at how much interest savings there is when they make a small adjustment like this. So again, make sure you have those conversations and ask the questions. Next slide, please. Affordable mortgages. So what I mean by this is that, as we know, the cost of living in the Lower Mainland is amongst the highest in Canada and is closely tied to the real estate market. There are some options to help reduce monthly payments for your mortgage, And if you're purchasing your first home within the specific criteria, you may be eligible for a lower mortgage rate with Vancity. So for example, when purchasing a home, if your purchase price is under $1 million, you have 20% or more of a down payment, you may be eligible for a lower interest rate for our 5-year fixed mortgage specifically. So be sure to ask your Vancity professional about that program and if you're eligible for it. Next slide, please. Previously, I had mentioned renovations and access to equity. The mortgage pre-approval can also help you determine if that is a possibility. So this can help you with updates or repairs you may need to do to your home, or if potentially adding a rental suite is a possibility. This is again the planning that would help you determine if these options are right for you. I want you to also be aware that at Vancity, we have planet-wise renovation loans. So if you are a homeowner and are wanting to improve your home with energy-efficient updates, please have a look at our website, vancity.com. You can also scan the QR code featured here on this slide. It just helps you determine if the update you're interested in making falls under this category. For example, an energy-efficient update I often hear about is adding a heating pump. So why would you invest in a home energy project? Well, it can save you money. Something simple like that can lower your heating bills by more than 50%. It will improve your home's resale value, and it also reduces your environmental footprint. And of course, we all want to do that. So there's another exciting update I wanted to mention that the government has announced. As of January 15th, 2025, provided you can approve, you may be able to refinance up to 90% of your home's value for insured mortgages for the purpose of adding a rental suite in your home. They will also allow you to amortize this improvement over 30 years. So again, just to recap that, insured mortgages, it has to be your principal residence, and it has to be for the purpose of adding a rental suite. Potentially, you could utilize up to 90% of your property value. Adding a rental suite can really be a great way to have your home work for you. That additional income can help with your monthly cash flow, your monthly bills, or help pay your mortgage down faster. This is a great new program that is coming, and now is the time to start planning for it. If you get your pre-approval done soon, you will be able to take advantage of this program come January 2025 when it is available. Next slide, please. So just to recap, I wanted to mention there are great resources on our website, vancity.com. We have also launched a first-time homebuyers hub. There's great tips and great information on there, so please have a look. Again, I encourage you to take some time to book an appointment to speak with your professional at Vancity, your expert. We can meet you in branch or book a phone appointment at your convenience. I hope this has provided some helpful information, but what I hope you really gain from this is that we are here to meet you wherever you are in your journey, whether you're a first-time home buyer, a homeowner, or someone who hopes to be in the real estate market at some point in the future. We are here to meet you and help you along the way. There's no one scenario that's the same, but the constant you will receive is the support and the advice that you can trust. So I hope to meet some of you along your journey, and thank you. And Anjana, I'll pass the floor to you.
Thank you, Alissa. That was great information. It's really great to hear all the different options our members have when they're looking for a mortgage with Vancity. And yes, please don't forget to book an appointment with a Vancity mortgage professional. We'll now pass this over to our next presenter, Marcia Jean-Baptiste from CMHC.
Thank you, Anjana, and hi, everyone. It's so nice to see so many learning about the home buying process today. As was just mentioned, my name is Marcia Jean-Baptiste. I'm with CMHC, and I work here in the Lower Mainland of BC. And today what I'm here to do is just give you a brief introduction to the world of mortgage loan insurance. So next slide, please. In case you don't already know, CMHC stands for Canada Mortgage and Housing Corporation. We are a federal crown corporation that has been in operation in Canada for almost 80 years now. We're generally known for mortgage loan insurance. However, through our people, our partnerships, and the programs that we deliver on behalf of the Government of Canada, CMHC is rising to meet Canada's housing challenges. And we're really working hard to meet our goal that every Canadian has a place to call home. Next slide, please. So what is mortgage loan insurance? this is really not to be confused with like home insurance or life insurance. Yes, it's an insurance that's in place, but it's there to protect the financial institutions against financial losses in the event a borrower defaults on their mortgage payment. It's offered on loans of up to 95% of the purchase price or market value of the property. If we move on to the next slide, here we'll see like the difference. So why is it that a lender would need to be protected against a borrower default? So in Canada, home buyers typically have to put 20% down payment in order to purchase a home. That's what we call a conventional mortgage. So you can imagine today in these days, 20% to come up with 20% can be significant. And in the future slide, we'll see what that could represent. But in the event that the home buyer does not have that 20% to put down, they can put as little as 5% down. And this is what's called a high ratio mortgage. And this is when the mortgage loan insurance becomes necessary and is mandatory. So when a financial institution, in this case Vancity, lends 95% of a purchase price, there is an additional risk that the borrower in the future may not be able to make their payments, as opposed to someone who's put a lot more of a down payment, say 20%. So that's why we have that mortgage loan insurance in place. So what does that mean for you? So oh, yeah, no, that's good. Next slide, the slide, perfect, thanks. So as we talked about, it can take a long time to come up with 20% down. So the example that we have here is on a purchase of, say, $700,000, which, could be a condo in anywhere really in the Lower Mainland. Let's say $700,000 purchase price. If you're going to go into a conventional mortgage, your down payment has to be $140,000 at a minimum. Now, if we reverse that and go into an insured mortgage or a high ratio mortgage, in this case, we're putting the minimum down payment. Now that down payment becomes $45,000. So we're seeing a difference of $95,000. So if you're thinking about, okay, how long is it going to take me to save $140,000? Actually, first of all, how long is it going to take me to save $95,000? But now if you're adding on that extra, $45,000, I'm getting mixed up with my numbers. How long will it take to save $45,000? How much more will it take to save almost another $100,000, right? So that's the advantage to you as a home buyer into paying that mortgage loan insurance in order to get into your home sooner. So in this case, the premium would be $26,000, just above 26, and you don't have to pay that upfront, right? So obviously, if you had an extra $26,000 sitting around, you would put that on to your mortgage. So that mortgage premium is added into your loan and amortized over the period of time that you choose. It's 25 years, or if you're eligible, 30-year amortization. Next slide, please. So here we have a snapshot of how the premiums are calculated. So on our last example, we saw that premium up to $26,000. So that's because we're paying a premium of 4%. The down payment requirements is 5% on the first $500,000 of a loan, and then 10% on the remainder. And you'll notice on this chart that we do still have premiums on mortgages that are over 80%. So let's say you have put 20% down, you might ask the question, well, why would I still be paying a premium if I'm putting 20% down? In some cases, depending on where the property is located, sometimes a lender, or the say Vancity, might require mortgage loan insurance anyways, again, just for that added protection. It could be, maybe it's in a rural area. So CMHC insures everywhere in Canada, from coast to coast to coast. But sometimes there may not be a branch or representative for, say, Vancity in some region. So in that case, maybe they'll implement adding the mortgage loan insurance still on a conventional mortgage. So that's why we're seeing that chart go all the way up to 65% loan to value here. It was mentioned that we can go up to 30 years now for first-time homebuyers purchasing a new build. And in that case, there is a premium surcharge of 0.2% to go up to that 30-year amortization. Next slide, please. So how do you get mortgage loan insurance? So for starters, this is not something that you're going to apply to CMHC for yourself. Once you've talked to your Vancity account rep and it's determined that you're going to need mortgage loan insurance, then Vancity is the one who will submit the application to CMHC on your behalf. So we will do another review of the application. So we're going to review the borrower, so that's you, the property, and the financing. So we already talked a little bit about some of the eligibility requirements in terms of credit report, your debt servicing ratios. These are things that Vancity will go over with you, but CMHC will also take a look at that. Your income, who's living in the property. When we look at the property itself, we're going to look at the condition of the property. How many units is it? Is it a single family home? Is it a duplex, a triplex, or fourplex? We can go up to 4 units when we are looking at residential mortgages. And 4 units meaning like a fourplex, right? So let's say you have a home that has 2 sides to it and 2 basement suites. That could be something that we could consider. And when we look at the financing, this is, again, where we're going to be looking at your interest rate, again, your ratios, like what is the probability that you're going to be able to continue to make those payments for the long haul of your mortgage. So this is where we're going to look at any mitigating risks. And if there are some potential risks, we'll communicate that with Vancity and then see if we can make some adjustments. Our next slide, please. So I'm not going to go through all these programs, but this is just a little snapshot of some of the programs that are available to you. So starting with Eco Plus. Eco Plus is when you're purchasing a home, and actually this is kind of another side note. In BC, all new constructions as of last year need to be built to a certain energy efficiency level. That energy efficiency level is the minimum requirement to participate in our Eco Plus program. And what that means is that you would be eligible to receive 25% of the premium that you paid to CMHC returned to you. So in our example of $700,000 purchase, that premium was $26,000. You would be getting back from CMHC somewhere about $6,500 back. And that's, a check cut to you. You can do whatever you'd like with it. It's not, you don't have to put it on your mortgage, but we would suggest you do, but it's money back in your pockets for purchasing an energy efficient home. On the CMHC improvement, this is where you're going to be maybe purchasing, maybe not, it's not the home of your dreams, but it's the home you can afford and it needs a few renovations. You can add the cost of those renovations to your mortgage and pay that down with your mortgage. And in addition to Vancity's planet-wise renovations, if you're making eco improvements, you can also still receive 25% of your premium returned to you. CMHC mortgage loan insurance is open to newcomers to Canada, as well as self-employed borrowers, and it is portable, which means that if you, say, purchase a home today and it's insured with CMHC, and let's say a year later your family situation changes and you need something bigger or smaller, and you still need an insured mortgage, you can port the premiums that you've already paid to your new mortgage now, so you don't have to pay double premiums. So these are just, again, a snapshot of it. Your Vancity account rep will be able to talk to you about these programs in more detail, should you be eligible for them. Our next slide, thank you. So as mentioned, there are some new changes coming up in a month and a half now, I guess, or 2 months. We're looking at the amortization now being extended up to 30 years for first-time homebuyers who are purchasing a new or an existing home. So currently, as of August 1st, first-time homebuyers purchasing a new construction are eligible for 30-year amortization, but starting December 15th, it will be open as well to first-time homebuyers buying even a resale, like an existing home. And any Canadian who's purchasing a new construction will be also eligible for 30 years. So that's coming up December 15th. And on our next slide, again, same thing, December 15th, the cap has been raised from $1 million to $1.5 million for an insured mortgage. So what this means is it still has to be under. So it says 1 million on the screen, but the purchase price has to be currently $999,000 99,000, something below that. And same is going to be for the 1.5. It has to be under 1.5. And the same tier is applicable, 5% on the first 500,000 and then 10% on the remaining portion. So that will be effective December 15th as well. Our next slide, please. We have a bunch of resources on our website. We know Vancity has great resources as well, but if you're looking at the CMHC website, we have mortgage calculators there, affordability calculators, as well as debt servicing calculators, just to see what your household expenses would look like should you get into a new mortgage. And our next slide, we have a lot of resources too for first-time homebuyers who are new to Canada. So for new to Canada, we have a brochure that talks about buying your first home in the country. It comes in several different languages, and then we also have our home buying step-by-step guides. They are you can download them on your phones, and they're interactive, so you can go through them. It goes through some questions, kind of just getting you prepared as well for the home buying process. And of course, these are all free on our website. If you are looking for additional information or you would like some CMHC updates, you can feel free to scan this QR code and sign up for our newsletters. You can also follow CMHC on LinkedIn if you have a LinkedIn account. I believe we also have an Instagram account. I'm not sure about Facebook, but LinkedIn for sure. And I'm going to go with 99% sure we have an Instagram account as well. You can follow us there for more updates and any upcoming news on mortgage loan insurance and all things CMHC. And that's it for me. Thank you so much. I'm looking forward to seeing what questions come up in the Q&A.
Thank you, Marcia. That was great. And with all the recent and exciting updates, this has provided a lot more clarity on what CMHC offerings are available for our members. I did also want to mention for our guests that are participating today, if you can't make it to the end of the webinar or you would like to access this webinar at a later time, this will be available on vancity.com/webinar, as well as on our YouTube channel. So please be sure to check that out if there's anything that you missed or you want to recap on. We'll now pass this over to our next presenter, Andrew Wan with Oakwyn Realty.
Thank you, Anjana. Oops, sorry, 1 second. Pardon. So yeah, everybody, just want to thank you quickly for your time today. It looks like I'm the last speaker for questions, so I'll jump right into it. My name is Andrew Wan, and I'm a realtor with Oakwyn Realty. I've been licensed for the last 14 years, and previously I actually have a background in banking. Currently, I'm running an intimate team of 3 people. We work with all types of clients, from first-time home buyers to seasoned investors. Annually, we will fall in the top 1% of agents. We're generally closing 80 to 100 deals a year. So definitely hoping we can offer some expertise on the subject today. Next slide, please. So before we get started, I really quickly want to touch base on the current market situation. I think it's an interesting kind of curse and a blessing in Vancouver that you can't turn on the news or social media without real estate coming up. So I'm sure as many of you are aware, it has been a slow 2024 for real estate. There is no sugarcoating it. We are currently at a 5-year high for inventory, and sales simply do not support these numbers. You may have also heard that we are in a quote unquote buyer's market. And really what that means is that there is plenty of inventory sitting on the market. And generally you are not in competition right now if you find a home that you love, as listings are staying on market longer than usual. So the real question is, what does this mean for you as a potential buyer in this market? And honestly, this is a great time to entertain entering the market. Prices have come down, and as a buyer, you have leverage at this point in time. On top of that, the overall outlook is positive. We saw a 0.5% interest rate reduction from the Bank of Canada this morning. And while we cannot predict the future, it does look like interest rates will continue to come down over the next year or two. Historically, that is an indicator that confidence will return to the market, both regarding prices and transactions. Next slide, please. So when you're starting your search for a home, the first thing that you want to do is assemble a team. First and foremost, most importantly, will be to speak with your Vancity mortgage professional. As they said, they will help you with a pre-approval and educate you on any first-time homebuyer programs. Secondly, and in conjunction with your Vancity mortgage professional, will be to engage a realtor. Your agent is going to guide you from the moment you start your search up until the time that you receive your keys, and they will play a valuable role in introducing you to other trusted resources. These resources are going to include, to bring your transaction to closure, a lawyer or notary that will help with completion and ultimately transferring title into your name, an inspector who will check the home you're interested in for any deficiencies, an insurance broker for home insurance at completion, and optionally an accountant in case you have any questions about the tax implications of your purchase. Next slide, please. So briefly wanted to touch on why you want to work with a realtor. A realtor is going to guide you from the entire home buying process, starting from assembling that home buying team we spoke about, up until you get your keys, and even beyond that, if any questions arise once you've moved into your home. One of the big questions that first home buyers like to ask as well is, how are we compensated? We as agents are actually compensated by the seller. It is the seller's responsibility to pay both their listing agent and the agent who brings a buyer to their home. So we are essentially a free service for you on the buying side. And really quickly want to touch base on the home buying process and where your agent is going to come in and add value during the transaction. I do want to premise this by saying this is a very quick summary for the sake of time here. But once you've, thank you. Assuming you have assembled your, previous slide, please. Thank you. Assuming you have assembled your home buying team and begun your search, your realtor is going to provide you with listings in your parameters the moment that they hit the market, as well as the occasional off-market or pocket listings that are not visible to the public. Your realtor will join you at showings to ensure that you're asking the right questions and really provide you with some good perspective while you're there. Once you find a home and it is time to make an offer, your agent will help you with an appraisal. Realtors, we do not simply make offers based on listing prices. Rather, we will provide you with neighboring comparable sales to make sure that you can make an educated offer based off the market value of the home you're interested in. Your agent is also going to ensure that you're protected during your due diligence period regarding a review of building documents, inspection, and financing. And finally, to wrap things up, they will connect you with trusted partners to close the transaction and ensure that the completion and possession goes smoothly for you. Next slide, please. And lastly, for first-time homebuyer considerations, Vancity and CMHC have done a phenomenal job covering the majority of financing benefits for first-time homebuyers. Very quickly, there is one item that I wanted to touch on, which is going to be property transfer tax. Property transfer tax is generally going to be the largest cost when purchasing a home, and it is calculated as 1% on the first $200,000 of your purchase price and 2% thereafter. It does escalate over $2 and $3 million deals, but we'll keep it here for now. So for example, if you were to purchase a home for $500,000, property transfer tax would be $8,000 on top of the purchase price. However, as a first-time home buyer, as long as you live in the home as your principal residence, you will actually have this full amount rebated back to you. There are not a lot of homes under $500,000 these days. So if you do purchase a home over $500,000, but below $860,000, you will still receive a partial rebate on the property transfer tax. And that's really summing up what I wanted to chat about today. I'll hand this back off to Anjana for questions.
Thank you, Andrew. That was great. It's really great to have the perspective of a realtor and how they can work to support you in your home buying experience, along with your financial institution. So thank you for that. That concludes our presenters. And now that you've had time to listen and absorb the content, we want to hand it over to you to see if you have any questions for our presenters today, Alissa, Marcia, or Andrew. And a reminder that you can ask your questions by entering into the Q&A box. There should be a button at the top where you can click on that button and enter in your question. We do have one of our first questions here, and I'll hand this over to Alissa. Do you need a mortgage pre-approval to be open? Do you need a mortgage pre-approval to be able to open an FHSA?
Yeah, good question. And no, you don't. You can have an FHSA opened now, currently. It's meant to be able to plan for the near future, but also a few years down the line. So it is important to take advantage of that sooner so you can benefit from the contribution room from the time of opening. So you can open those FHSAs right away, and you can do that with your Vancity mortgage representative. You can also do that with your investment advisors and specialists as well.
Okay, thank you for that. So we have another question here for Marcia. Can you please define the criteria for energy efficient home?
Well, yes and no. So energy efficiency right now in BC, we're looking at BC Step Code 3. So if you go onto BC's energy code, you'll see the listings there. BC Step Code, we also do follow like the federal government has some programs as well for energy efficiency that would be like shown online in terms of what the minimum requirement is for that home to be set as energy efficiency. As energy efficient. I don't have the exact numbers because that varies based on which guide you're going to use. But I would say the easiest one right now in BC to follow is the BC Step Code 3. And yeah, as I mentioned, as of I think it was May of 2023, all new constructions are required to meet the BC Step Code 3. If you're purchasing an resale, you may want to check. You probably have to find out, maybe get the home tested, or if they have like an Enter Guide sticker on there, it might identify if it is meeting that energy efficiency requirement.
Thank you for that, Marcia. The next question is for Alissa. I've heard that besides 20% for a down payment, there are other costs, for example, closing costs. What other costs like this do you need to consider? In other words, how much should we really need to save beyond the down payment? It's a great question.
Yeah, good question. The CMHC recommendation is a minimum of 1.5, so of your purchase price. So if you there is a range they suggest of 1.5 to 4%, but I would say that if you have 1.5% of your purchase price, that should cover the majority of your closing costs. So again, as Andrew mentioned, property transfer tax, that's a big one. That's probably the largest closing cost you need to consider. Legal fees, I mean, they range a bit, but something to definitely put into that calculation. And appraisal costs is potentially another addition to closing costs that you might want to consider. But as a general rule, you want to maybe have at least 1.5% available.
Okay, that's good to know. Thank you. A question for Marcia. Would buying property in the U.S. exclude me from benefiting from the first-time homebuyers program in Canada?
No. So to be a first-time homebuyer in Canada, it's in Canada. So if you've purchased a home in the U.S., you would still be eligible in Canada. If you go on the federal government's website, it lists the definition of first-time homebuyer, and even if you've purchased a home in Canada, in some circumstances, you can still be eligible as a first-time homebuyer. For example, if you have not occupied that property in the past 4 years, or hasn't been occupied by your spouse or a common law partner, and also if there's been a separation or a divorce. You can still qualify as a first-time homebuyer if now you have to go out and get your own home. So you could still be considered a first-time homebuyer even if you have purchased a home in Canada. You just have to look at those details as well. But definitely not in the U.S. If you've bought in the U.S., you're fine.
Fine. Okay, that's good to know. Thank you, Marcia. Alissa, I'm going to throw another question your way here. What if I already own a home, but my future wife does not? Can we take advantage of the first-time home buyers when we buy together next?
Oh, that's a good question. And Marcia, I might have to ask you on this one. From what I understand, it doesn't apply for the partner who has owned. However, the person purchasing, there might be a percentage of that is considered, but I think it's pretty specific on the purchase price and value as well. Marcia, do you have anything to add on that question?
Yeah, so there's like also another side to look at it. Like for us, when we are considering now, say for example, the first-time home buyer for the 30-year amortization, on our policy, as long as one person on the application fits the first-time home buyer definition, you could still be eligible, say, for the 30-year. So what I would suggest, and what I always suggest, especially for Vancity, when they're going to be speaking with you, is to, again, look at the home buyers plan on the government's website, to see if you would still be eligible, say, for example, with the RSP withdrawals and things like that. But when it comes to CMHC, on the CMHC side of things, as long as one of the applicants meet that first-time home buyer definition, then you're okay to be on that mortgage with, say, your spouse or your common law partner as well, or anybody really. It could be friends purchasing together and one of them is a first-time home buyer and someone else had purchased in the past, for the CMHC side. So I'm going to say for anything else, like your first-time home buyer saving account, the RSP withdrawals and things like that, I would definitely refer back to the home buyers plan to ensure that you're okay there.
And I think this is a bit of a specific one. So again, just make sure you book your appointment with your Vancity rep, and we'll dive into that specific question for you and get you a concrete answer if that helps.
Yeah, I agree, Alissa. Each scenario is so unique. So you want to make sure you make an appointment with us so we can get a detailed understanding of what the scenario is. I have another question here, and I believe this might be another one for you, Marcia. Does living in a co-op disqualify you from any programs?
No.
Okay, thank you.
Yeah, that's all. This is no.
Just
No.
simple. No, this is good.
Yeah.
And I have another one here. Alissa, I'll throw this your way. What are the pros and cons of a 30-year mortgage? Does age of the mortgage holder matter, especially if they only have another 10 years before retirement? It's a great question.
Definitely. So pros and cons. The pros of a 30-year mortgage amortization is that it reduces your payment. So it can help you with things like your approval. You might not be able to approve over a 25-year amortization, but you could potentially approve over a 30-year amortization because, again, it will reduce your monthly payment. The con to that, of course, is that there's additional interest costs when you extend your amortization over a longer period of time. So the value of taking the 30-year amortization and getting into that market ahead of time is one that you hope would outweigh the cost of the interest. For example, the growth that you would get in the market, the equity that you would earn getting in there sooner rather than waiting a longer period of time to then approve for a 25-year. So that's, I would say, the pros and cons. Age of the mortgage holder actually does not matter. We don't take that into consideration. We don't take into consideration time before retirement. If it's a pre-approval or approval is done, it's a picture as of your current situation. So as long as your income and your debts and your liabilities all fall within the range that we're able to approve you, then we're happy to move forward on that. So no, we won't discriminate over ageism or any of that. It really just has to do with how your financial picture is and if you're able to approve. Thank you.
Thank you for that. So I have another question here regarding pre-sales. And Alissa, I think I might hand this one over to you again, but we might need the insights of both Marcia and Andrew. So the question is about pre-sales. What is the process? Are there any strict eligibility criteria, or is it more of a flexible process?
So the pre-sale process, and I'm sure Andrew can touch on this as well, but the project, they vary a large amount. So some people purchase 2 years in advance of completion of this project. So we do always suggest to have something in place to know that at this time you're able to purchase a pre-sale. Having said that, as we've seen in the last couple of years, rates can change, a lot can change to change your pre-approval. We can only hold mortgage approvals for a specific period of time, for example, like a 90-day period, because again, we would have to have updated credit reports and things like that. So it's a bit of a different process because it's just something that you might have to do and keep in mind as the completion comes up. So for example, if you do purchase 2 years in advance, and you want to make sure that you don't do anything in the next 2 years that might affect your pre-approval. So for example, by getting an expensive car loan, that can be a huge detriment to your mortgage pre-approval and then therefore your approval. So again, it's important if you are looking at something like that to just get an idea of where you are in your process. And I know there's deposits that need to be placed at different periods of time. You want to ensure that you have those available. You're not scrambling at the end to make sure you can make those deposits and the time frame allotted with them. So I don't, there's nothing wrong with them. They're great products and they give you time to save an additional amount before the completion date. But it is important again to stay in contact with your Vancity mortgage rep, because you will want to know that nothing is changed or nothing is at risk when it comes to that approval. I don't know if Andrew, if you wanted to add anything on the pre-sale markets and anything.
Yeah, absolutely. I mean, from an eligibility to purchase, generally you're going to need a deposit, which is paid to the developer between 5 and 20%. So it's usually run out over 1 to 2 years. It depends on the project that you're buying. The lowest we ever usually see is 5 years, and that's usually a project that has already been selling for quite some time. Newer projects that have just launched are generally looking for somewhere between 15 and 20%. So as long as you have the deposits available, you would be eligible to purchase. But again, with Alissa, I would say you'll definitely want to consult with your Vancity mortgage specialist just to make sure you're comfortable with the financing side of things.
Okay, great job covering all those details. We have a question here. It's a little bit more specific about details on $1.5 million and what the mortgage premium would be on that. And what I'm going to encourage you to do regarding this particular question, at the end of the presentation, we will have links up where you can actually go to our Vancity site and or book an appointment, which allows you to actually sit with a mortgage professional and they can break down what that would look like for you. Because again, each scenario is unique and we want to make sure we give you the right answer for your particular scenario. So we hope that's helpful and we'll have that available in just a few minutes here. I'm checking to see if there's any additional questions. And while I'm waiting, Marcia, do you have any thoughts on premiums or anything like that for CMHC mortgages?
Well, specific to that question about the 1.5, again, yeah, it will really depend on the situation and what the purchase price is, but it's your down payment, if you can do the math, is 5% of the first $500,000 and then 10% of the remainder. So again, depending on the amount, that's what we're sitting at. And if you're putting the minimum down payment, which would be, like say that 5% plus that 10%, then that premium is 4% of the mortgage amount. So whatever your loan's going to be, the premium is going to be 4% on top of that. As far as we know, there's no changes to premiums coming up, and not, we're not going to charge an additional premium for going over $1 million. As far as we know, it's staying the same.
Okay, thank you. So I'm seeing one more question here. So I can't see the whole question for some reason, but it's a good one. It says, let's say I'm contributing to the FHSA to build my down payment. What happens if I suddenly decide that I no longer want to purchase a home? What happens to the FHSA? Alissa, can you answer that?
Yeah, it's a great question. And don't be concerned, because what happens is that if you decide that, down the road, homeownership is not for you, assuming you have the room, you are able to transfer your FHSA to, say, an RRSP or a RIF account. And let's say you don't have the room, you are also able to withdraw it. It will be added back to your income. So there will be tax paid on that, because you did get that benefit of the tax reduction when you first invested in the FHSA. So your money is not lost to you, but depending on the room you have in your registered plans, then you might just have to be able to move that over to your retirement funds at that point.
Okay. And I have one final question here for the evening. What kind of information will I need to bring to my meeting to see a mortgage professional when I come to Vancity?
Yes. So when you book your appointment, we often will touch base with you to ensure that you are bringing the right documentation. So, for example, if you are a salaried employee, we will ask for things like 2 recent pay stubs, perhaps a notice of assessment, an employment letter. If you are a self-employed person, we may ask for things like 2 years of your tax returns, T1 generals, notice of assessments. It's a bit specific because of income is very different dependent on who it is. So again, your Vancity representative will reach out ahead of time once you book your appointment to ensure that you're bringing in the right documentation. Having said that, I don't think that it's necessarily something you have to bring in on the first appointment because again, we need to just have that conversation. We want to understand where you're at, where your goals are at. So this could be a few step process as well. So don't have that pressure of feeling like you have to collect all your documentation ahead of time to ensure that you're coming to this appointment. It's just important to book that time and ensure that we answer your questions and provide some information for you. And again, we will, if you want to bring everything, we'll prepare you for that ahead of time and give you a little checklist to bring in as well. So thank you.
That's fantastic. Thank you. And Heather, I'll just have you move to the last slide. That concludes our presentation for the day. And I want to thank all of our participants as well as our presenters. We hope that information was valuable to you. We encourage all of you to participate, book an appointment with our Vancity mortgage professionals via the link provided or scan the QR code. And remember, you don't need to be buying a home today, but let's meet to discuss your plan or answer any questions you may have after this presentation. You can visit us at our local community branch, online, or give us a call. Please make sure you follow us on YouTube and our various social media platforms and stay connected with us. There's great content you can access through these social media platforms, and please don't hesitate to reach out. We look forward to talking to you soon. Thank you, everyone.